you have to remember gold and silver are insurance. When you have a fire in your house, you can't get the insurance the day after the fire. It just doesn't work that way. There is a huge fire coming, and that fire will happen. And people are going to kick themselves in the pants if they didn't purchase the silver before the fire comes.
Hey friends, thanks so much for pushing play. It's great to have you back. I really do appreciate it. I have back on the line SRS Rocco reports Steve St. Angelo, who is one of the top precious metals truth analysts in the world today, and we're very lucky to have him. Steve, how are you?
Sean, doing pretty good. The amount of different events that happen are speeding up in the volatility in the markets and the financial system as well as political system. The volatility is just increasing. It seems like it's like on the Richter scale, we're at an 8, 9 now all the time instead of a 1 or 2 were years ago. So it's great to be here.
Yeah, it's great to have you. Speaking of earthquakes, I agree with you. The economic situation globally is approaching an 8.0 or a 9.0 on the Richter scale, and we know what a 9.0 did to those poor souls in Japan. And, I just wanted to take a minute to just let everybody know that Steve and I had a really nice conversation here the last 10 minutes before we hit the record button, just catching up, talking about current events. It's really wonderful to be able to speak with somebody that, is like-minded. Steve, to get started here, the debt ceiling has been reached again, but the spending continues. It's clear nothing is ever going to change, and the U.S. government will continue on this path right over the cliff. I want to talk to you about some of your recent articles, but if it's okay with you, I would like to begin with your latest one, and it's an important article, and sadly I don't think it's necessarily good news for us. Something big is about to happen to silver. Can you tell us about that?
Yeah, normally I don't look at this information. If people come to my site and listen to maybe an interview that we've done before, I tend to focus more on fundamentals because fundamentals always win out in the end. Now, it could take decades. It could take sometimes years. Enron was a typical example. That was a Ponzi scheme. And so that Ponzi scheme wasn't based on fundamentals. It was based upon lies, deceit, and leverage and debt. So it collapsed. The same thing would happen during the people need to realize the total U.S. investment banking system, Lehman Brothers, Bear Stearns, Merrill, they all went under. I mean, that's Lehman Brothers was around after the Civil War, totally gone. So, Ponzi schemes, debt, leverage, highly derivatives, they can go on for a long time, but it comes to a point where gravity and inertia takes place, and then it implodes. So I focus on the fundamentals, but I like to take a look at what's happening with let's say factors, data, information that gives us an idea of what's going on a short-term basis. And I know Turd over there at TF Metals Reports tends to focus more on the COT structure, which is the Commitment of Traders reports on gold and silver. And I don't look at that, but boy, I looked at it last week, and it was amazing to me to see that the commercials, which are basically the big bullion banks like J.P. Morgan, they increased their shorts. I think it was 18,595 shorts in 1 week. And then they liquidated 5,000 something. So the net short position increased a staggering 24,000. And on my site, I've got a 4-year chart going all the way back to when silver hit a high back in 2011. And I've got this blue dotted line, and the net short position now, if you look at the chart, it shows you how the commercials went up and down, and it's like a stair step, but they're very narrow steps. Well, this one was the biggest one. It was a 24,000 net short movement. So what that means to me, if you look at the 1-year chart, when the net short position for the commercials is at high, they have the most largest net short position, silver peaks. And then as their net short position declines, they liquidate their contracts, it grows smaller, the price of silver falls. Mm-hmm. And so they've done that 3 times. And I believe it was, according to the data I'm looking at, in January 5th last year, 15th, 2014, they had 59,000. Silver was like $21, and then it fell $5 over the next 4 months. And then in January, at the end of January this year, It was they had 61,000 net short contracts, and it was at 18.5. It fell $3 over the next 2 months. Well, now they have 62,000 and a half, and the price of silver at the high was 17.75. So Bo Polney, who's been doing some charting analysis, he thinks we're going to see a huge spike up. I talked to him on the phone. Now, I don't know what's going to happen. Especially, there's a lot of things, Sean, taking place with the Greek exit. We see a lot of volatility now with the treasuries, with the rates over the past couple of weeks. So, if we have a Greek exit, if something really happens, it could be a spike up. Mm-hmm. But if we don't, I feel this way: if we don't have a dislocation, a major bank failure, a Greek exit that sends shockwaves through the system, we don't have that. I think the commercials will prevail, but I don't know if they'll get the price down that far. I think they just needed to add a bunch of shorts to keep it from rising to protect themselves.
Interesting. Well, we're not big on the charts here, and we're not big on CFTC data necessarily because, who can believe anything they tell us? But Bo's call for a short squeeze makes sense. It may be wishful thinking based on this chart because, as you note, when the bullion banks, when the commercial banks, when they load the boat with their short contracts, they inevitably do drive the price down. And it's this paper manipulation of the physical metal that we've been talking about forever. So you have to remember that the enemy of humanity is central bankers. The people that are doing this are the commercial banks. And and who are they backed by? They're backed by the central bankers and 0% interest rates. They can get all the money they want at 0%. And when they can drive the price of silver down with these contracts, they can make a lot of money. It's just frustrating because where is the justice? Where is the justice in this system? And beyond that, help people understand what this means. 62,485 net short silver contracts. How much silver, how many ounces again are in each of these contracts? Isn't it like 5,000 ounces of silver per contract?
Yeah. It's like 5,000. So if we
What is that? 62,000 times 5,000?
300. That's like 315 million ounces. They're short, which is more than a third of the mine supply.
Yeah,
they're short right now. But let me qualify what I said so people understand. I thoroughly believe in the precious metals and started investing in them in 2002. Nothing has changed. And so, even though we may see a volatility in the silver gold price, we may see some further price reduction. Actually, the more the price silver falls, the more I believe in it. Because you see, we'll get into this, but silver is being valued two ways. It's valued based on its supply and demand and its cost, which is a commodity. And that's actually the way gold is being valued right now. It's supply and demand, and its cost. It costs about $1,200, let's say $1,100, $1,200 to bring on ounces of gold. It's about $17, $18 to bring an ounce of silver. That isn't its value. That's its cost, and it's a commodity. What we have to remember, and your listeners have to remember, silver and gold are competing not only with the fiat dollar, not only with the treasuries and all the bonds that they're buying in the world, they're competing with the 105 trillion in conventional paper assets under management. They're competing with all that. You see, to have a store of value, you have to have something that you can trade with something else. Well, all those other things, fiat money is not a store of value. It's an exchange, but it's not a store of value. All those other retirement accounts and bonds are not a store of value. They are promised to pay in the future. So right now the entire world, U.S. entire world, most of the world, is invested in that system, which is the reason why the central banks are motivated to keep that system going. They don't care about the 1-2% that are invested in gold and silver. They care about making sure that people realize when they retire, they're going to get their $500,000 retirement account. Well, what happens if that faith is gone? The whole system implodes. Not only all those values of the treasuries and the bonds and the fiat currency, so does the value of real estate. All these things just come down. So they're trying to prop them up. But people need to realize this 4-year downturn in the price of gold and silver, it's been done on purpose to protect what the central banks believe as the major system. But unfortunately, this system will go just like Enron, will go just like Bear Stearns and Lehman Brothers. But when it finally does go, we will see the exact opposite with gold and silver. They will shoot up because that's the fundamental value will be realized, that silver and gold are stores of value, whereas all those other assets or supposed assets are not.
Now, your article, Why is the U.S. Importing So Much Silver Bullion, is definitely the next place to stop on our caravan to truth here because as we've just said, we know that the commercial banks are now short, over 300 million ounces of silver. That's paper silver. Now, in the real world, the U.S. has imported 838 metric tons of physical silver in just the first few months of 2015. And as you note, that's a surge of 44% over last year's figure. What's going on with the physical silver market here, and why is the U.S. importing so much physical silver bullion?
Well, that's a good question, and we're trying to find that out. You see, the U.S. has been the largest silver importer in the world. We've been importing, on average, about 5,000 metric tons a year. And that's been basically an ongoing basis. And it'll drop here and it'll increase. And we actually imported about 6,000 in 2011. That's when the price of silver hit 49. And matter of fact, solar consumption for silver was the highest in 2011. So I think a lot of people were buying silver. Corporations were probably acquiring silver because they saw, oh my God, the price is going up. So there was 6,000 metric tons imported by the United States in 2011. Well, it's been falling, and last year, 2014, according to USGS, we imported a total of 4,900, almost 5,000 metric tons of silver. Well, this is just bullion we're talking about. In the first 2 months of 2014, February 2014, we imported 583 metric tons. This year, we imported 838, but that's not all. We imported actually a total of 1,040 metric tons, if we include the doré bars, which are semi-pure bars made by the mines in Mexico and in different areas. But we imported that much silver, and in my article, I made the point that I don't know why we're importing that much. We imported 5,000 last year. Industrial silver consumption in the United States has been falling, according to GFMS, and I believe them. It's been falling about 4 or 5 million ounces a year. So I would imagine our GDP fell in the first quarter, so silver consumption in industry fell in the United States. U.S. Silver Eagle demand was actually about the same for the first quarter. And the COMEX inventories didn't really build all that much. So this silver that's coming in, and let me tell you where it's coming from. Last year, 96% of the silver that we imported, the bullion, came from Mexico and Canada. This year, it's fallen in percentage. It's only like 82, but we imported 54 metric tons from South Korea. We imported 40 from Poland. We imported 30 from Bolivia, and get this, we imported 18 metric tons from Germany. I was surprised to see that. Why are we importing bullion, silver bullion from Germany? So for some reason, which I'm still trying to figure out why, someone is buying and holding on to silver bullion, and it's not going into the market. The U.S. silver market does not need more silver. So somebody is stockpiling silver, which is also the reason why I'm starting to see. I'm amazed that the net short commercials moved so much in just 1 week. Something isn't adding up, and so when you start looking at that, I believe there is either a big individual, a big bank, or a big corporation. They are acquiring a lot of silver. And so that's a good sign, but I still can't figure out why the commercials increased that much. So are they protecting it from a big rise, a price spike, because we could have a huge event happen in the global geopolitical? It's going to be interesting going forward.
Well, Steve, certainly, I don't have all of the answers, and what we're trying to do here is find the answers. I mean, that's the reason we have these conversations, is that we want to keep our eyes on the central banks, the Federal Reserve. We want to keep our eyes on JP Morgan and these big bullion banks. We want to keep our eyes on those that are shorting the precious metals. But to answer your question as to why the U.S. might be importing so much silver, this is just a thesis. It's not to say that I'm right, but one of our SGT report readers, Rusticus, has posted some really interesting information that I shared in a post called "Is BRICS Nothing More Than a NWO Bait and Switch?" And in that article, he talks about a Chatham House policy paper that describes exactly how adding gold to the valuation of the SDR is going to work. And the plan in a nutshell is to add gold to the SDR, revalue gold and likely silver much, much higher, and quickly set up new nationally and transnationally SDR-backed currencies around the globe. So if that's true, and if in the future when the dollar dies, what we see is a new global economic system that does cherish the value of physical precious metals, perhaps those in the know, the same very, very wealthy billionaires that are now getting out of the United States and moving to New Zealand and moving, to private little islands so that they can escape the coming collapse, perhaps these are the people that are stockpiling massive amounts of physical silver in their own private vaults, because they know in the future precious metals are going to go much, much higher in the real world, in real pricing, when the dollar dies. And that ties into exactly your own thesis, Steve. And in fact, in your latest article, you write, there is no limit to how high the value of gold and silver could reach as the greatest paper Ponzi scheme in history collapses. So whatever they're doing in the paper market, we have to keep our eye on it, but we also have to keep our eye on the long game. That's just one idea on why maybe they're importing this much precious metal. You think that has any merit at all?
Sure. That Chatham paper that you're talking about, if that is true, that they're going to use the SDR and we're going to revalue gold to a higher price, well, the U.S. is in trouble. I mean, Bloomberg, I guess you read this, but Bloomberg just put out an article, which is interesting, that in a nutshell, the number they quoted, that the Chinese have 10,000 metric tons of gold, and so they were basically figuring out what would Chinese yuan revalue to based upon that. Well, there's, I think in the article, or
60,000.
Yeah.
Yeah. Well, if I may, let me jump in. I actually wrote about that because it was the same.
Okay.
It was the same troll writer who wrote not that long ago in Bloomberg. He said that the silver market, the annual silver market, is a $5 trillion market. A $5 trillion a year market, which that doesn't add up unless you, of course, are accounting for all of this paper fraud. So this same writer wrote the piece you're talking about, and it was a terrible article, which is why I wrote about it, to contrast his fraudulent reporting against the truth of the matter, which is what you're saying. Alistair McLeod and many others out there believes that China may already have 10,000 tons of gold, and possibly much more than that. But this article said there's no way that's true, and this article used China's officially reported total of 1,054 tons, and they cling their article to the fact that that's probably still the case. But if they had 10,000 tons, the gold price would be roughly $60,000 an ounce. It was a very confusing article, but it was, I think, another great example of mis- or disinformation coming out of Bloomberg. And my response to the article really was, well, what happens if we find out China does have 10,000 tons of gold? What happens tomorrow if we find that out today?
Yeah, I think Bill Holter, who is now working with Jim Sinclair, he spoke about that, and it seems as if the rumor is, speculation is, the Chinese need to come clean, public with their official gold holdings by sometime in the fall, because they want to be a part of the IMF SDR. So if they're going to be a part of it, they have to acknowledge, and there has to be accounting and inventory of how much gold they really have. So if it comes out that they have this 10,000, 15,000 metric tons, that will be a shock to the U.S. dollar. And so that could get the ball rolling. But let's say all that doesn't. We have to look at the volatility. Now, I've got a new report coming out in a couple of weeks, and it's got like 48 charts in it. Some of them are my old charts are upgraded, but there's a chart of the price of oil and the price of silver going back till 1900. Basically, the price of silver and price of oil were dead, like a flat line, from 1900 to 1970. Well, what happened after 1970? Two things happened. One, Nixon dropped the gold peg to the U.S. dollar, 1971, and the U.S. peaked in oil production in 1970. Two things happened simultaneously. Well, gosh, you look at the price of oil and the price of silver before 1970, they were dead. Now you look at them after, the volatility is enormous. And the reason why the volatility is enormous has to do with peak energy and has to do with fiat money. So I learned this early on. If you want to solve problems, you have to get to the root of the problem. I found this out from one of the top engineers in the NASA. He said, Steve, if you want to solve a problem, you've got to get to the root of the problem. Well, you see, we have a lot of mainstream analysts and even alternative analysts that are messing around with superficial data. Look at this and look at that. Well, you're not getting to the root of the problem. You got to get to the root of the problem to see why things are happening the way they are. So we are going to have a dislocation. The Chinese probably have a lot of gold. That's going to once they announce that, that's going to have a severe impact on the U.S. dollar. But it gets worse. I'm just going to mention this. The U.S. has been able to survive now because of the shale oil industry. It's in serious trouble. The shale gas and shale oil industry that is producing oil and gas that we need. As a matter of fact, it's 9-something million barrels of oil, which we peaked in 1970. We fell to below 5 in like 2005. We're back up to 9 million, which is great. It's great, but it came at a cost. It came at a very severe cost, and that problem is that industry is in severe trouble, and it looks like the low oil price has gutted it. And so I think by the end of this year, we're going to see some serious bankruptcies unless the U.S. government bails them out. Could happen. But when this energy situation really starts to unfold and we start to see declines, it will destroy paper assets. Because if you're sick, you or I are sick, we can't get out of bed to go to work, you don't have the energy to go to work. It's as simple as that. You need energy to do work. Energy drives the markets, finance steers it. People need to realize that. I'll repeat it one more time. Energy drives the market, finance steers it. And finance should be good accounting by things like gold and silver. Unfortunately, Sean, we have hundreds of trillions of debt, derivatives, retirement accounts, treasuries, all floating around there. They only get value if you burn energy. If you don't burn enough energy, if you don't have enough energy, all those promise to pays disintegrate, and people need to understand that. So if your listeners worry about when is the manipulation by the elite or the central banks or the commercials, when is it going to end? Well, it probably will end when China and these BRIC countries, if this is the case, they're going to go to an alternative currency, alternative trade system. That will cause it. And if it doesn't, the energy will gut it. The energy will force the situation because you can't print money when your GDP is falling because your energy supply is falling. So that will force the situation. It may take a few more years, but I think by 2020, Americans are going to know it. Yeah. As well as the rest of the world.
I totally agree with you, Steve, and I think the reason that we need to keep in focus the work of the mockingbirds in the financial media, like this Nicholas Larkin gold article, which was titled, guys, I found it here, China's gold standard would need a rate 50 times bullion's price. And he talks about a $64,000 an ounce price of gold. And so within this sort of misinformation piece is the idea that if China had 10,000 metric tons of the metal, it would justify a $64,000 an ounce gold price. And it's an amazing thing because on one hand, we see Bloomberg saying 10,000 metric tons by China in a new gold standard equals $64,000 an ounce. But don't worry, readers, because China only has around 1,000 tons. And as you noted, Bill Holter, and as I noted, Alistair McLeod, these guys believe that China already has 10,000 tons of gold, if not more. What's your take? What do you think they've got?
Well, Koos Jansen, who does a great job over at Bullion Star, he showed that the World Gold Council, and I still use some of their figures, that they totally missed, they totally underreported China's gold consumption. I think it was in 2013 by half. I think, according to Koos, the Chinese consumed like 2,000 metric tons, and according to the World Gold Council, they had a little more than 1,000. So, but that is just private. That's not even official. You see, Russia, they'll tell you we just added 300,000 ounces in April to our reserves. China, you don't hear a word. People don't think China hasn't been adding gold. They're probably adding a lot more gold. So I think these analysts are correct. It could be, I would imagine it's at least 6 to 8, and it could be 10 to 15 or more. But let me get back to what I was saying. You have to get to the root of the problem. This gentleman from Bloomberg is typical of superficial analysis. And let me impart this on your readers. The reason why gold and silver, as well as most physical commodities, the inflation has been kept, even though we've had inflation, it's probably much worse. Why? Because in the late 90s, let's say in the late 90s, the derivatives came on the market. And we had the retirement accounts and derivatives, they weren't that high. But now everyone was, the central banks, Wall Street, the Fed, bamboozled the public. And money, funds, were siphoned away from physical things into derivatives, into paper assets. So over the last 10, 15 years, 20 years, instead of people buying a mine, buying gold to retire or silver to retire, or a business that produces a mill or anything physical, it's gone into these IOU paper digits, derivatives, whatever. And that money did not go into the physical economy. So the inflation that we should really be seeing is astronomical. But people think they get a statement from their account, and they say you've got $500,000 in retirement. Well, that's where the inflation went. Well, your stock is worth this much. That's where the inflation went. It's all in these paper assets, and they're going to implode. And then we're going to really see what inflation is. We're really going to find out what it's going to cost to really buy something. And so your listeners need to understand the whole system, not just gold and silver, not just oil, corn, milk, whatever. The values of those are totally mispriced. And you need energy to allow those to function. And so I think when we start seeing a peak and decline, it's going to destroy the net present value of most paper assets. And we will see a huge, let's say, change, or refiguring, a recalculation of what it actually costs to buy things. And we haven't even got there yet. So that's how I look at it. And we're the world, especially the U.S., and let me just tell you this, now that I've got this, according to their data, the World Gold Council, China, India, Japan, Korea, Thailand, Vietnam, they invested 536 metric tons in physical coin and bar gold in 2014. It's probably double. It's probably 1,000 metric tons, but that's the official record. Middle East, 42 metric tons. Turkey, 55. Europe was 220. And Germany was half of that. But if we look at the UK and Italy, the World Gold Council has a dash. According to them, Italy and the UK didn't buy any gold. No gold. last year as an investment. They may have bought some gold jewelry. And the United States came in at 47. So if we compare the Asian, East, China, India, they had about 1,000 if we go by realistic data. And then Europe and the United States was 267. So it just goes to show you the Western mentality has been totally diluted into believing that a paper digit or a paper asset or a digit is store of value, and it's going to destroy them. And I think we're going to see this. We're going to see this play out in the next few years, and probably by 2020.
You hit the nail on the head when you talked about people's brokerage accounts, their 401k balances, the statements they get from Wall Street that make them feel all happy inside. Those are really, at this point, false assets. They're really not assets at all. They're ones and zeros. They're paper promises, most of which will never be delivered on. Our suggestion would be that you turn it into something tangible that has had value for 5,000 years, something that's real wealth, physical gold or silver. And just to flesh out a little bit further what you were talking about with those brokerage accounts and those false paper promises, Steve, it's exactly what Bill Holter said in my last interview with him. Listen to this.
This is going to be a overnight or over the weekend type of event where you have what you have on a Friday, you wake up on a Monday morning and you can't trade anything and you're locked into your position. So it's absolutely imperative that you have what you want to have in the new coming world, because you won't have a chance to change it.
You'll have what you have. So look at that brokerage statement and think about what that statement might mean to you after the collapse, the day after collapse, the week after the collapse. Do you have what you need, or do you have nothing more than ones and zeros on a paper statement? Steve, I really do appreciate your time. Why don't you tell people about your very important website and tell us about anything you have on the back burner or anything that's coming down the pike for you?
Yeah, the SRS Rocco report, this is going to be my third year, and I started back in May of 2012, and I focus on energy, the precious metals, the miners, supply and demand fundamentals. I kind of see how all those kind of react, how they intertwine with each other. And I've been providing public information now, free public information for the last 3 years. I will be rolling out some very modestly price paid reports, and I spoke about the first one that's coming out, and there's some very interesting information in there. So in a few weeks, I should have that on the site. I do want to end this by telling your listeners what you just said is important. Gold and silver, even though some of the hardcore precious metal investors are being a little disillusioned, it's like, when is this going to end? The price continues to seem to fall. But you have to remember, gold and silver are insurance. Just as Bill Holter said, when you have a fire in your house, you can't get the insurance the day after the fire. It just doesn't work that way. I mean, you can plead as much as you want, but you cannot get the insurance. So everything you've worked for, everything that you own, if you don't have the insurance, is gone. And then you've got to purchase another home, and you've got to start out with another 30-year mortgage. And so the thing is, gold and silver, the fire is coming. It's not that we may have a fire. See, at least in insurance, you don't know if you're going to get in a car accident. You don't know if you're going to have your house burned down. But what's coming will happen. There is a huge fire coming, and that fire will happen. So it basically, Sean, it comes down to the Clint Eastwood. How lucky do you feel? You're going to buy some now. Maybe next week it might be a little bit lower if the commercials have their way, or next month. But how lucky do you feel? The fire is coming, and people are going to kick themselves in the pants if they didn't purchase the silver before the fire comes. And so I want to leave it with that. I believe we are going to see this huge fire within the next couple of years. It could happen next month. But by 2020, if you didn't get your stuff in order, I think people will be very, very unhappy.
Well, we'll end it right there. Our guest has been Steve St. Angelo from SRS Rocco Report, srsroccoreport.com. Steve, thanks so much for joining us today.
Sean, it's been a pleasure.
The pleasure's been all mine. And guys, Thank you for joining us. We very much appreciate your support. You know that, but it needs to be said every single time. Thank you for your support at sgtreport.com, thelibertymill.com, and thephaser.com. Have a terrific week ahead. Bunker down. The storm is coming. God bless.
This is going to be a overnight or over the weekend type of event where you have what you have on a Friday, you wake up on a Monday morning and you can't trade anything and you're locked into your position. So it's absolutely imperative that you have what you want to have in the new coming world, because you won't have a chance to change it.